Hello everybody, it's Mark Pruitt with Strategic Estate Planning Services. I hope this video finds you well. This is another strategic market update. I wanted to touch base with you in regards to the season, some important news from my family, market updates, things that are happening for next year. So lots on the plate and on the table, I guess you could say, for right now. The first and foremost, I want to make you aware, November 20th, 2022, Morgan Pruitt became Morgan Williams. She got married, Puerto Vallarta, a beach wedding, which is something she's always dreamed about. We had a nice, cozy family wedding, about 10 of us there, so it was small, but that's what she wanted to do. And she is now Mrs. Morgan Pruitt Williams. So I'm making the shift myself of learning how to say that Williams versus Pruitt all my life. When you talk to her and see her, please give her your best. And we're certainly wishing her and Justin the best as they begin this new venture and new journey together in marriage. Now, in regards to what's going on in the markets and what's going on with portfolios and what our plans are, let me kind of first give you some updates on right now, just what's happening. I've got on my phone here a couple of things I want to make you aware. Laura will put the link up. But it says right here, there is a slowdown happening. And that comes from the Wells Fargo and Bank of America CEOs point to cooling consumer spending. And they give you several things here. It says after 2 years of pandemic-fueled double-digit growth in Bank of America credit card volume, the rate of growth is slowing. It talks about that. Talks about there is a slowdown happening. There's no question about it, says Wells Fargo CEO Charlie Scharf. We are expecting a fairly weak economy. That's some information there in regards to what they are looking at. A couple other things I wanted to look at. It says the bank lenders, these are Bank of America and Wells Fargo, says with the bird's eye view of the U.S. economy are providing evidence that the Fed's campaign to subdue inflation by raising borrowing cost is beginning to impact consumer behavior. Surprise, surprise. It says fortified by pandemic stimulus checks, wage gains, and low unemployment, American consumers have supported the economy, but that appears to be changing. That will have implications for corporate profits as businesses navigate 2023. And that is what we see as well as the next tsunami coming in. The first tsunami was interest rates rising, the raising of interest rates aggressively. That is actually still occurring. That has not stopped. We're expecting maybe a 50-point basis raise in December. These are my opinions, and also January, and then maybe a quarter of a point in February, depending on where CPI inflation comes in at. You're still looking at probably another point and a quarter minimum in a raise in interest rates. So they're not done yet. They're gonna, once they finally get to the point they think they're okay, then that's going to hold there for probably 6 months, and then they will begin, the Fed will begin to slowly lower rates to re-jumpstart the economy. That's the way it always works, and that's what we'll expect, but not until the second half of 2023. So when you look at what's the game plan for 2023, we're looking at January, February, March, April, that those are going to be some good buying opportunities because markets are still, because they're going to be good buying opportunities because the second tsunami is what I just read you, which is corporate profits. You know, they're sitting here firing the gun and sounding the alarm that corporate profits are, they're expecting across the board, across the nation, are going to be lower and going to be harder to gain. And so you'll begin to see, in fact, some companies are already doing it, they're revising their forecast downward for next year. And so when you begin to see that, and you see it often, there's patterns. That means they're beginning to look at that. You know, it's interesting, when you see those patterns, that means markets are going to struggle in that first quarter and even into the second quarter. What does that mean for your portfolios? What that means for your portfolios is there's a buying opportunity. So let's think of it like this. Would you rather buy it at this price, or would you rather buy it at this price? We feel like the markets will give us some great buying opportunities in those first 4 months specifically. And so it's interesting when you do that, that means you're going to be back in slowly, that will get you back into position for when this market does turn. And when it turns, it'll turn and it will start moving. I want you to be positioned for that ahead of time. We don't want to be chasing that. We want to be ahead of that. And so that's why we will begin to layer in January, February, March, April, and get you positioned on that. So you have to understand we're still in markets that are choppy, but we feel like while there's more to come, that we're in a position to where we've gone a lot of it down to safety. In fact, I can even tell you this: you can go into your Fidelity accounts and look at a year to date. This is an exercise I'd encourage you to do because I've done it myself for several. Actually, I'm doing it for everybody just to look at it. And this is the pattern that Stephen and Lamar and I are seeing. Year to date, so January 1 to current date, look at your loss of what's occurred. Go in and change the date to July 1st to current. So July 1st to current. You'll see most of that damage that occurred was the first half of this year. We've made changes along the way to minimize from July to current. And so that kind of tells you the first half of the year is when the markets were really tumultuous and we were making changes along the way, but we've continued to tweak that to the point we've really stopped a lot of that from January to current. And so we feel like that's now put us in a position to be able to begin to layer back in at the beginning of the year. If you've got questions on that, feel free to call us 1-800-381-8870. We'll be more than happy to go through that with you specifically. In fact, that reminds me, a lot of you have called in already and you have scheduled your review either via phone call through Laura or Morgan, or you have done the Calendly link that has been sent to you via email. Thank you. If you've already done that, I just want to say thank you. Many of you have already come in and done your reviews, and we appreciate that. That helps us to stay on top of what we need to stay on to make sure that it's functioning the way you want it to function as well. So if you haven't done that, if you would please take the time, take the email. Laura will send you some more of those as well, Calendly links, or just call the office again, 1-800-381-8870, and schedule a time. And then either Stephen, Lamar, or I will see you, and we'll do the review of this 2022 and what all the game plan is specifically for you in 2023. That should do it for now. Merry Christmas to all of you. Thank you for your time. Thank you for your support. We appreciate each one of you. We are blessed to serve you. And we look forward to serving you in the future, and specifically 2023. God bless each one of you. Merry Christmas.